All right, hey folks, this is the YouTube Live for today, Thursday, the 15th of March. I'm here in beautiful Phoenix, Arizona. We're going to do our workshop here for the next 2.5 days. I was traveling yesterday, so no YouTube Live for that, but I want to show you something real today. Some of you know that we bought some Bank of America shares just a couple days ago upon a perceived breakout. Now, unfortunately, that breakout didn't really follow through, and we're very, very close to a stop loss. So considering the amount of questions I received a couple days ago from people basically commenting on some breakout strategy that I talked about, I wanted to follow through and show you guys exactly how we deal when a breakout move starts to be a fake out. Okay, so let me give you guys a quick example in my actual trade right now. Let me flip this around. You're going to see my messy hotel room here in just a minute, but let me flip this around. All right, so what you see here is a stock called Bank of America, okay? And what I did is I bought some Bank of America earlier this week because there was a breakout, as you can see. Now, the stock then quickly reversed on, I guess, the 13th of this month. And I had a stop loss at $32, which is down here. Now, what I like to do typically is I like to set a stop loss on a daily closing basis because a lot of times you get intraday fake outs. So as you can see, this breakout is so far faking out. Now, let me show you another quick thing, broadly speaking. You look at, for example, other stocks like Morgan Stanley, also in the same, roughly the same space. See if I can drag this down. And you'll see it's the same movement. So the reversal or the breakout fake out wasn't just taking place or isn't just taking place in Bank of America. It's taking place across the spectrum of large cap banking stocks and brokers and things like that. Even Goldman Sachs, a stock that we really like, is chopping back and forth and not really able to follow through and break out. So to me, a very simple stop loss idea that I want to give you today. My theory is that I like to use daily closing basis stops. Now, of course, if you have a very, very meaningful intraday bearish reversal, then absolutely you can stop yourself out before. But so many times in my career have I seen that a stock essentially will try to push below your stop loss and then basically go back higher intraday. So an easy way to get rid of that problem is to set a stop loss at the end of the day. And also, by the way, keep in mind you can always get back in. So like, for example, I haven't yet been stopped out of this trade because it has to close below $32 for me to stop out of the trade. But if let's say today the stock closes below $32 and I'll close, I can always get back in if it starts giving us another move, the next move higher. So just keep in mind, that you don't only have to, you don't have to be so sensitive with stop losses. And I hope this is helpful, folks. If you like this, if this makes sense to you, please give us a thumbs up like. I have a little bit jet lag. It's been a long trip yesterday. Subscribe to the channel. Let everyone else know about what we're doing here on our YouTube Live. And I will see you guys in the next YouTube Live that may be happening tomorrow. Take care.